Hello, and a massive hello to everybody. How's everybody doing? I hope everybody's having a great day. 22nd of November, 2015. No trade calls or recommendations are responsible for their own stuff. The fact that you're listening to this means you're ready to understand. You accept all disclosure disclaimers here on the website, and we're also understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, what's going on? I hope everybody's having a great weekend. I hope anybody in Brussels is staying safe, and again, still a lot of geopolitical risk and uncertainty. So it's always very difficult to make calls on the markets on the opens because things could change very quickly. So we'll just have to do the best we can with the information we have. So keep in mind that we're going into a bit of an interesting week. Again, we still have heightened geopolitical risk across the board as an overlaying theme here. We've got a bank holiday in Japan on Monday. Monday's going to be interesting because we have all the PMIs out of Europe, so which will be quite interesting. And then heads up for that existing home sales out of the U.S. and the Fed announcement, which could be a bit of a wild card. We'll have to see what happens there. On Tuesday, we've got IFO out of Germany. We got the RBA. We got Stevens speaking. We've got preliminary GDP out of the U.S. and consumer confidence. So that could be an interesting day. And then Wednesday, we have some more Australian data overnight. We've got durable goods. We got unemployment claims, and another bunch of medium impact data and trade balance out of New Zealand. Now keep in mind that U.S. markets are closed for Thanksgiving on Thursday. Friday's going to be half day. We do have second estimate GDP out of the UK on Friday, some Japanese data, some European data. So again, there's a fairly steady stream of data coming out, and it could be a bit funky because we're going into the end of the month. We've got these things, geopolitical uncertainty. We may have some squaring. We've got thinner liquidity because it's a holiday week effectively. So, just heads up on that as usual, same thing as always. Now, if we look at the charts, not an awful lot has changed, right, from what we've been discussing. So there's not that much to discuss. I mean, crude's still holding at those lows. So the big thing is to see, is it going to hold below 40 or back above 40 and try and stabilize inside that range? But nothing has really changed. We've got gold is holding fairly heavy at those lows below the 1100. So unless it starts to move back above the 1100, it still holds a bit of a heavy tone. We'd expect to see it trying to base. It looks to us like we still see buyers coming in on dips on crude and gold. So we'll have to see what happens there. We haven't really changed our tune. We still think that longer term, all these moves lower on the commodity currencies and the commodities in general are interesting opportunities to try and pick up some longs, even though they're tactical longs. The ES is still hovering at highs, so no big deal. It looks like it's trying to press higher. Not a lot has changed. We're still tactical sellers into those highs rather than buyers. So again, really not a lot has happened on the future side. We're pretty much in line with all those previous discussions we had. I mean, one of the things that a lot of people were looking at was cable, and I mean, no big surprise really on cable. As we said, is unless it can you can make a tactically there's a case for a little bounce, but it's still inside the range. And what we said is that unless we can get back above this whole area here, which is basically that 53 into 54.50, those two moving averages, chances are this is going to stay heavy. So broadly speaking, it's still staying inside of our range. So not an awful lot has changed. It's still staying fairly stable here. But again, you have to respect the chart, right? To a certain extent, it is making a whole series of lower lows, right? Right here, still making a whole series of lower highs. It's making a series of lower lows too, so pressure is still on. So going into the week, I'd say we're still stuck pretty much in that key area, which is basically that 52.50. That's pretty much the line in the sand, right? If we can close above there from a daily close, we'll likely have enough ammo or likely have enough Momo to try and take a stab back at those two moving averages. As long as it holds below, well, then most likely you'll expect to see these lower area in the 50, 80s attracting to the downside. Now keep in mind that we'd suspect this holds with a fairly heavy tone unless we get a day close or a week close back above that with 155. So we expect choppy trading, but most likely probably the sell the rallies to be the positioning for this week, or the way to play it this week. The key levels, the key areas don't really change. We've looked at that, and there's no big change. They're still on the chart. We can post that on the blog in case anybody wants me to do that again. Now, Euro JPY, what's going on Euro JPY? So Euro JPY, we're still holding fairly heavy. We talked about the fact that we had two interesting bull bear lines here, and that the market is holding heavy as long as it's holding below those 131.80s, right? It looks like it's desperately trying to take out those lows, trying to get some more momentum below the lows we put in last week. And if it could continue, if it can break that early at the beginning of the week and hold below in terms of daily closes, then we would not be surprised to see this try and continue to take a stab all the way back down into this whole, this whole area here, which is the 129.30s. If it starts to close back above the 131 pronto, quick in the week, then we would not be surprised to see a nice little rally back into the 132s. Now, we still believe that in terms of, and this is the discussion we had into the FOMC minutes, as far as we're concerned, pretty much the only things that are not really priced in, or that could be a surprise to the market, are dollar negative and euro positive rather than the other way around, right? It's very difficult for somebody to be surprised by the fact that it looks like, a Fed wants to raise rates in December. Whether they will or not, that's a different case. And it's very hard to believe anybody could possibly be surprised that the ECB wants to do or announce more QE or negative nates or something in December. So we still think that in terms of positioning, in terms of squaring, whatever, the risk is still for surprises in terms of Euro USD to the upside. And again, profit taking on the dollar moves. So we'd still be very cautious about trying to chase these moves. Now, it doesn't mean these moves can't extend, but all things being equal, we would expect these moves. So by these moves, we mean this latest dollar strength thing. If they're going to extend post the first weeks of September, when we get the ECB and the FOMC out, rather than before. If anything, we would suspect that a healthy market is to see a bit of positioning, squaring, profit taking of these moves as we lead towards the ECB and the FOMC, right, the December meetings. So having said that, how does that translate to Kiwi? So we talked about the fact that the 65.00 was the big pivotal zone for Kiwi, and we were looking for opportunities to get back long, even though it was we consider it as a corrective move, right? I think it was a tricky one to play. I think Aussie was much cleaner, but again, on the FOMC, there were a lot of opportunities when everything tried to press extremes and then couldn't get any traction, right? So, one of the best examples here, here you see this trying to close positive and then reverses back up. Now, it's not really a done deal, because even if you look at the action here, it's still fairly bearish, right? And we still we got a negative close here on the daily on Friday. So I still expect to see a lot of choppy action around these 65.00s. Should we continue to hold heavy on the week, then we would not be surprised to this try to accelerate all the way back into the 62s. But as long as we hold above here, we would be less surprised by an attempt to try and make it back up into these areas, and we see a bit of positioning, squaring, and profit taking on these recent moves. We'll have to wait and see, and that's fairly similar to the action we got on the Aussie, right? So we talked about this a lot, and we said, caution here, keep in mind, especially if we start moving above this 50 DMA, big bull bear line, daily closes above, we expect this to try and get some traction. We would expect that those stops above the 100 DMA to attract. Those got clipped, and as long as we hold above here, then we would not be surprised to see this continue to accelerate all the way back into the 74.00. right? Now we got some fairly clear, fairly interesting action on Aussie as we did across the board into that FOMC, right? If you look at a shorter um, time frame, right, last week of how the market traded, as you see, we were kind of stuck inside this broader chop zone with the market just looking to take out stops left, right, and center, right? And then as we came back into Thursday, what happens? We come back down, we clip some stops, and there you go. We take out those lows, we get this nice little reversal candle, and we know that after you get this move on the announcement, and unless you get a continuation lower in the next 30, 60 minutes, it doesn't really pay to try and fade. You have to go with the Momo. If anything, that's the play, is to go with the Momo right to the upside. And you see this continued quite nicely to the upside. Then what happens? It breaks above these stops, and then in a, very, very pure fashion, you have this whole previous resistance, right? That when you get these moves, acts as support, acts as support, and then it continues to press higher, very interesting, buying opportunity. The only thing you can do is buy into those for the correction high. So again, and you saw that kind of action pretty much across everything. So for students of the market, post that FOMC, there's very, very nice opportunities across the board. Equally, what's happening on Euro? Well, Euro, it looks like that those 106s are being defended, and again, a lot of chop. I think there's really much to do about nothing as long as we continue to hover inside this whole 108, 106 area. To the downside, there's a possibility that those 104s are going to be attracted, but if we had to, if we had to take an aggressive stance either way, we expect the next bigger move is probably going to come to the upside rather than the downside, even though that could still easily just be a very simple corrective move, but we still think the risk is kind of to the upside in a choppy area. And that's a similar kind of discussion we've had on Euro GPB. We've been structurally bearish on Euro GPB for a long time. We still believe that ultimately it will be trying to come back into these 62s, right? But we think if anything here, the risk is for a bit of a squeeze here if it can't get a move lower as it's stuck inside this range. If you go back even into a 1 hour chart, you can see last week a lot of very nice scalping opportunities to the upside. And as long as those lows hold, there's no reason why we can't get a nice little correction, even though it's a corrective, even being a corrective rally, right? So that's an interesting area. On yen, we're still looking for these highs to hold and these 122s to attract. So that really hasn't changed. That's pretty much where we are for the week. A very interesting area back up into these highs on USD CHF, opposite chart to Euro. We'll have to see what happens here. This is a very interesting zone. You see that the market tried to get some downside Momo here, then broke back up, but here it's still making a lower high here. So it's very choppy, similar to Euro. It's going to be about positioning, squaring how this dollar move gets tackled going into next week. So that's pretty much where we stand. A little side note: don't forget that we've opened up the subs to the weekly webinars. So the Learn page on the blog is live again. So there's a bunch of new stuff on there if you want to look at it. And that's pretty much where we stand for the week. So we'll try and do updates throughout the week. If anybody has any chart that I haven't covered, anything they want me to look at, if it's something we have and we look at, just hit me up on Twitter. I'll post the chart on the blog. And again, guys, stay safe and have an awesome one as always. Thanks so much for listening to this. Have a great one, and speak to you guys soon. Take care. Bye-bye.